And welcome. Our top focus at this hour. The collapse of Silicon Valley Bank last week raised questions about what else might be lurking in the wider system. Within days, the market turmoil ensnared Swiss lender Credit Suisse, forcing it to borrow up to $54 billion from Switzerland's central bank. Now, large U.S. banks have injected $30 billion in deposits into First Republic Bank. U.S. banks have rushed to the rescue of First Republic Bank. The lender is caught up in a widening crisis triggered by the collapse of two other mid-sized U.S. lenders over the past week. Analysts say investors are fretting about potential runs on global bank deposits, with contagion talk sweeping across trading floors. Yesterday, while Swiss giant Credit Suisse announced borrowing to shore up liquidity, the spotlight shifted back to the United States. The shares of First Republic, a regional lender, had tumbled 70% in the first 9 trading sessions. Some of the biggest U.S. banking names, including JPMorgan Chase, Citigroup, Bank of America, Wells Fargo, Goldman Sachs, and Morgan Stanley, are involved in the rescue. U.S. regulators said the show of support was most welcome and shows the resilience of the banking system.
This week's actions demonstrate our resolute commitment to ensure that our financial system remains strong and that depositors' savings remain safe.
First Republic Bank is not the first canary in the mine, but there are canaries that are now feed up, and those include things like Silicon Valley Bank, Signature Bank, and lots of worry about Credit Suisse, a storied financial institution. In a market, all prophecies are self-fulfilling. So if people begin to feel like a bank is going to fail, they pull their money and they tell everyone this bank is going to fail. And almost no matter how stable the bank was when the story begins, this begins to sap the confidence, deny the assets, and create a situation where also none of the other players in the market want to stand next to you or want to do business with you.
A round of financing on Sunday raised through JPMorgan and had given First Republic access to $70 billion in funds, but that failed to calm investors. Worries of a contagion deepened with the demise of Signature Bank to follow that of Silicon Valley, and depositors began moving cash to larger lenders. First Republic Bank's stock closed up 10% on news of the rescue, but its shares fell 18% after market trading, after the bank said it would suspend its dividend. News of the rescue also helped boost Wall Street indices. Smaller banks also rebounded from the recent sell-off. The Federal Reserve has lent U.S. banks nearly $12 billion under a new one-year lending program unveiled on Sunday. U.S. Treasury Secretary said authorities moved swiftly to protect depositors at Silicon Valley Bank and Signature Bank. She said authorities acted when they saw a serious risk of contagion that could have triggered runs on many banks.
Well, we felt that there was a serious risk of contagion that could have brought down and triggered runs on many banks, and that's something, given that our judgment is that the banking system overall is safe and sound, depositors should have confidence in the system, and we took these actions.
As per the U.S. Central Bank, the totaling outstanding amount of advances under the bank's term funding program reached $11.9 billion by Wednesday. WION is now available in your country. Download the app now and get all the news on the move.